Good afternoon. Thanks for tuning in. You're watching us BQ on BloombergQuint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. If you've got questions on equity, then you know that this is the perfect show for you. You can send them to Twitter, Facebook, YouTube, and WhatsApp. And in fact, WhatsApp, I'm told, is on stream again. Or you can call us on 022-454-04141. Or you can even mail us on askbq@bloombergquint.com.
All right, and before we get to the individual queries on the show, let's quickly tell you what's happening with the markets. We reclaimed the mark of 12,000 on Nifty. We've also traded above that, but we're off the day's high right now. Maybe at higher levels, you are seeing some bit of profit booking coming by, and Sensex sitting with gains of about nearly 74 points. However, the broader markets, they seem to be outperforming today. So you've got the mid-cap as well as the small-cap indices gaining quite substantially in trade. And Nifty Bank is also just about holding on to its gains. Nifty Bank has seen gains of nearly 0.25%, I believe. So firmly above the mark of 30,500. Nothing to worry there about. Now, the support for Nifty is placed at its 100-day moving average, which is somewhere about 11,850. And on the upside, traders are watching out for the 50 DMA at about 12,150. I want to pull up the Nifty futures as well. Look at that, the discount is just widening. And now this is the fourth straight session that the Nifty futures have been trading at a discount. And this after the rally that we've seen in the last two trading sessions. We highlighted this yesterday also on the show. There could be a possibility of short squeeze. This basically indicates that positions on the futures, especially the short positions, have not been covered. And that was the case yesterday because on Nifty futures, we didn't see any sort of unwinding which came about. All right, then moving ahead, the market breadth, however, is looking good. So everything's looking better than what it was at least on Saturday, though it's deteriorated a bit, but still firmly in favor of the advances. So Nifty contributors list should also come up on your screen, giving you an indication as to which are the stocks which are capping the moves today on the upside. So Infosys, your heavyweight, is down. Kotak Mahindra Bank, Maruti Suzuki are down, while support coming in from the biggies, HDFC, Reliance Industries, also ICICI Bank gaining in trade. Just want to highlight a couple of stocks from the broader market. Shriram Transport came out with its numbers day before yesterday. We saw a sharp jump in yesterday's trade as well, and the stock's up another 7 to 7.5%. Ujjivan Financial is having a good day. That's gained about 6.5%. And power financing companies from the likes of PFC and REC have seen substantial jump in today's trade. Both of them are trading with gains of 7% respectively. While on the losing side, you've got Avanti Feeds, which disappointed with its numbers, and hence the reaction. It's down 13%. Remember, the stock had already gone up a lot in the last month or 2 months, and that's why you're seeing 13% downtick. Excite came out with its numbers yesterday, and since then the stock has been seeing some selling pressure. And Manappuram Finance, after falling in yesterday's trade, is down another 1.5%. Alex, we could be off the day's high, but still we are in the green right now.
All right. Well, there you have it. That's how the markets look right now. We'll soon be joined by Sameet Chavan of Angel Broking, but we are joined right now by Vikas Sethi of Sethi Finmart. I'd like to thank you so much, Vikas, for joining us on the program. We've seen a rip-roaring return to the levels that we saw before the budget, and yesterday particularly was quite the session. Would you advocate caution, though? And like Navneet was saying, in today's session particularly, and also quite a few sessions in the past couple of weeks, you've had the broader markets outperforming the benchmark. So with that in mind, could you give us a few of your recommendations from the mid-cap space that are good buys at these levels?
Yeah, Alex, as far as our markets are concerned, after the carnage which was witnessed on the budget day on Saturday, we've seen a spectacular recovery in our markets, and that has mainly to do with the smart recovery which is being witnessed in international markets, plus the fine print of the budget, which said the budget was not very negative. It was more or less neutral for the markets, and pretty positive for the FIIs in the sense that the DDT has been removed, and that would be pretty positive for FIIs and for multinational companies which dole out huge dividends. And to add to that, it was also positive for some sectors like infrastructure, where the investment by sovereign wealth funds would be 100% tax exempt. So these were the kind of things, I think, which would have augured well, and despite the fact that the markets were disappointed on the budget day, I think the markets have come off very sharply from those levels. And I think the current levels would be the right time to buy into quality stocks if one has a medium to long term point of view. Since you were asking about some mid-cap ideas, I think the 2-3 stocks which comes to my mind at these levels would be say stocks like Nippon Life Asset Management, which was also beaten down on the budget day, but then has since recovered. But I think it's a great quality company with pretty solid fundamentals. It operates in a highly underpenetrated sector, and I would recommend that one could be buying into this stock in a staggered manner at the current levels or at every decline. And I clearly see an upside of 25 to 30% in the next 9 to 12 months. The other stock which I like at the current levels is an auto component company by the name of VM Industries. It's again a good company with pretty solid fundamentals, low debt equity ratio, has marquee clients from the two-wheeler industry, and I think auto component as a sector would do well this year. And I am expecting revival in the entire auto sector for the current calendar year. So I recommend a buy on this stock also, and I think we could see levels of 575 rupees on the stock in a year's time. And my third idea would be a Kajaria Ceramics, again a company which is pretty solid. It's a leader in the sanitary ware industry with a dominant market share, a very strong distribution network, pretty strong brands. I think although nothing much or great was done for the real estate sector, but I think the sector seems to be on a revival path, and it's not only the budget where government could announce things. I think we could see some good announcements for the real estate sector, because this is one sector which could lead the economy's growth. This has a lot of other sectors dependent on it.
Sure.
So once anything of that sort comes, or once since I'm bullish on the revival of real estate sector, I think Kajaria Ceramics would do well. So I would recommend a buy on this stock as well at the current levels.
All right, so you've got 3 picks coming from Vikas, Nippon Life, VM Industries and Kajaria Ceramics. Let's take a technical view also on the markets, considering we're off the highs. Samit, how do you read the moves that we've seen in the last 2 sessions? We are back to pre-budget levels, but the futures are still trading at a discount.
Hi Navneet. In hindsight, yes, it looks good. We have given a V-shaped recovery, but in our weekly report also over the weekend, we had mentioned that we are seeing 11,600, 550 as a major support. It's a cluster of support. First being 200-day moving average. Previous breakout point was around 11,600, and there's a 50% retracement of the entire large move from the lows of 10,700 to 12,400. Precisely comes around that important levels. And technically speaking, we were at a sweet spot, and in last 3 days we've already seen that V-shaped recovery, 400, 450 points recovery in last 3 days. So overall, the bias still remains bullish, and we were getting conviction by looking at the mid-cap index. The way it is poised, if you look at the weekly, monthly chart, after nearly underperformance of 1.5 to 2 years, the tide has turned upwards for the entire mid-cap space. So we were quite convinced with that particular activity. Now, as far as levels are concerned, 12,050 to 12,080 is an immediate resistance. We might see some consolidation, mild profit booking. But over the next few days, we expect Nifty heading towards 12,200 and back to 12,350, 400.
Very quickly, Samit, what are your picks? Do you have a couple of picks to give us?
Yes, first one would be M&M Finance. After a long consolidation, this stock has now managed to surpass its sturdy wall of 370, 375. And if you look at the overall volume activity in last couple of days, it has risen substantially. So that provides some kind of credence to this rally that we have seen in last 3-4 days. So we expect M&M Finance to do well now. 415 is our near-term target. It's a positional target. Can be bought at the current level, keeping stop loss around 370. Apart from this, we are bullish on the entire metal space. In last 3 days, we have already given calls on Vedanta, Tata Steel and Hindalco. So at current juncture, considering the risk reward ratio, Tata Steel still looks good. Can be bought at current level, or minor dip around 455 would make it a good risk reward. 480, 82 is our near term target. Can be bought with a stop loss around 446.
All right, there you have it. Those are the picks on the technical side. We've got a caller today. P.S. Krishnan is calling in from Chennai. Mr. Krishnan, I believe that you've been trying to reach us, and thankfully we finally have you on the phone. Thanks so much for calling in. What can we help you with?
Good afternoon, Alex. Thank you very much. Thanks for connecting me in. So I have queries on 2 stocks. The first one is on UPL. I want to know what's the short-term view on UPL from a buy perspective.
Okay. And what is the second stock that you want to know about?
The second one is ONGC, again from a 1 to 2 month perspective.
Understood.
For buying.
All right. Samit, we've got two stocks for you. UPL Limited, currently trading about 2.5% higher. We've got Mr. Krishnan, who's looking at it only for the next couple of weeks or so. What are the levels that he should look at? And also, secondly, ONGC, whether or not it can be bought from the perspective of a month or two.
See, honestly speaking, around 5 and 5, 5 and 8, UPL would have been a good contra bet considering the weekly 200-day moving average placed around 500. So we have already seen nearly 6 to 7% recovery from that level. Now it has reached that corridor of uncertainty. So 540 to 545 would be seen as a major make or break level for this particular counter. So if the stock manages to surpass 545 and sustains above that, then you can think of buying. In that case, we would see the stock heading towards 580, 85. At this juncture, we would wait for this breakout to happen beyond 545. As far as ONGC is concerned, we are contra bias purely for another 8 to 10% move. If you see the entire weekly monthly chart, this stock has corrected sharply, has underperformed substantially, but now it has reached its major level 100, 102, and we are expecting a minor pullback first towards 115, 118. And if this stock has to regain strength, it has to reverse the trend. This stock needs to surpass 118 on a closing basis.
All right. Thanks for calling us, Mr. Krishnan. And let's move on to more queries on YouTube. Anand Sivaguru writes to us, and he wants to know which are good pharma companies for long-term investment. Vikas, you've already given us your mid-cap picks, but within the pharma space, is there anything which is looking good in terms of valuation and also future prospects?
Yeah, Navneet, from the pharma space, I would like to recommend stocks like Biocon, which looks pretty good. The company has been doing pretty well. The results were also good, and the stock trades at pretty reasonable valuation. So I would recommend Biocon. To add to that, I would also like to recommend Divi's Lab. The company is due to report its numbers today. So once let the numbers come out, but I think this is fundamentally a great company, and I think whatever is happening in China and the Wuhan province or Wuhan district from where APIs are supplied worldwide, I think since there has been some disruption in the supplies of APIs from Wuhan, I think that would be an indirect positive for a company like Divi's Lab, which is a leading manufacturer of APIs in our country. So I think Divi's Lab also could be one stock which one could buy at the current levels from a medium to long term point of view.
Okay, we've got another question for you, Vikas, this one on the long-term fundamentals. Apollo Hospitals, Narayana Hridayalaya, I struggle with this name all the time, and Aster DM Healthcare. Which one would you pick?
Like if one were to look at the safety as well as minimum returns, then I think Apollo Hospital would be the best bet. But if one were to take some risk, then Aster DM I think could give you substantial upside from the current levels. It's also into hospitals, and the company has been doing well, and I think the budget, the recent budget had laid clear emphasis on hospitals and health, and that would be pretty positive for the sector. So I'm that way bullish on the sector, but I think at the current levels Aster DM looks good. Apollo Hospital is a bit highly valued, so let it come down and then it would offer an opportunity for long-term investors.
Okay, that's the view coming in. Vikas likes Aster DM Healthcare in that space. Let's take another email query, and the handle name here is Indian Years. Okay. He's bought shares of Tata Power at 72 rupees, and he's bought these shares 2 years back, and he wants to know if he should now look to book losses as the stock currently trades at 57. Samit, let me take a technical view. Since he's making losses here, do you think current levels are good enough for him to book out from this position and also book losses, or do you see on the charts any sort of recovery on Tata Power?
See, it would be very difficult to take a call on this particular counter. Honestly speaking, in last 1.5 years, we have not advised this to our clients. Once maybe a short-term momentum call, but overall on a positional basis, we have already avoided. But the recent price action, if you see, stock has corrected precisely from its 200-day moving average. So as long as it remains below 61, 62, it would be difficult for this particular stock to give some kind of strength. But once the stock surpasses 61, 62, we could see a trend reversal. As of now, hold on. Let's see how prices behaves around 61, 62. If this stock struggles around those levels, then one should exit the stock.
All right, we've got another question for you, Samit. Samit, this one on Cummins India bought at levels of 608, which I understand is a recent high. Would you advise exit at this point? The stock is currently around 570 or thereabouts, and would you be able to give us a target and a stop loss?
See, this stock has been, deceiving of late. If you see the breakout from the levels of 600, it was clearly a whipsaw. Stock has nosedived from those levels, and now it's struggling around its level of 580, 582. So that's the level to watch out for. As of now, hold on, but don't keep a stop loss beyond 566. So I'm suggesting a stop loss below 566. Hold on, see whether the stock manages to surpass 580, 582. If that happens, then yes, again the stock can head towards 600, 620.
Okay, that's Cummins India for you, up about 1.3% in today's trade. Our next query is on Varroc Engineering and Auto Ank Company. Hari Kiran writes to us, and he wants a fundamental view for the next 2 years, as he's been holding 100 shares of this company at a price of about 460. Vikas, the IPO came in just, I guess, 2 years back in 2018. The issue price was about 960, 965. It's 50% trading lower than its issue price as well. Do you think next 2 years we can see some sort of recovery, and our viewers' entry level at 460 is good enough?
Yeah, Navneet, as far as auto component sector is concerned, I'm bullish on the sector from here on, but Varroc has not performed. Actually, it's seen a huge downside in the last couple of years. I think if one were to invest in this sector from a long-term point of view, then I just recommended a company by the name of VM Industries that looks good. And apart from that, I think a Sundaram Fasteners, a Gabriel India, Bosch Chassis, or a Motherson Sumi would do much better. So I think he can shift his investment to any of these stocks.
Okay, we've got a couple of questions on Colgate. We've got Harshvardhan, who's asking for a short-term view, and we've got Praveen Matthews, who's wondering whether to get into this based on technicals for the long term. So he's wondering if the price is right to enter, Samit. Stock is about 1% or so higher in trade today, but how are the charts looking?
One is sure that he wants to get into this particular counter for long-term view. Then certainly yes, stock has corrected sharply, nearly 25% in last 3-4 months. It has reached its 200-day moving average, placed around 1300. So that looks to a good entering point. Looking at the broader degree chart structure. So 1300 to 1350 seems to be a zone of accumulation. One can go long if one has a long-term view on this particular counter.
Okay, Colgate, of course, had a sharp fall post its numbers due to a weak volume growth, but you've seen a rebound at least post the budget. Remember, all these MNCs, they gain due to a dividend distribution tax being scrapped at company level. All right, I want to pull up Marico too. Akshay Mittal's written to us, and he's been holding shares of Marico at 372. He wants to know what should be his strategy to minimize his losses. Remember, when the entire FMCG space has been doing pretty well, this has underperformed. In fact, today, I guess Marico has also touched its 52-week low. Samit, what would you advise if somebody is making losses? Your entry level is 372. At current levels, do you think it's wise enough to book losses, or you can place a stop loss? Where is the bottom?
No, it would be very difficult to comment on the precise bottom, but the stock has now reached its important support zone, which is 295, 298. So as of now, you can consider this particular level as a strong support for a time being. One can keep a stop loss below 295 on a closing basis. Stock is clearly oversold. So from here on, some kind of respite is very much on card. So stock can give a relief move towards 325, 330. But one has to reassess the situation once the stock reaches its important resistance of 325. So if it managed to reclaim that level 325, 330 on a closing basis, we could see this stock heading toward 345, 350. But as of now, hold on, keep a stop loss below 295 and reassess the situation once the stock reaches 325.
Till last week, I think one of the sectors that was doing particularly well was the life insurance pack, and all of them were doing well on the stock markets. But then you had the budget, and you had a couple of announcements there that perhaps raised a few questions. So one of them, of course, is the proposal to list Life Insurance Corporation of India, and the other, of course, is the introduction of the new income tax regime. We've dealt with this a little bit, Vikas, but from the fundamental standpoint, if you have people who've entered at slightly elevated levels, levels. Would you say that they should get out before there's a possibility of more corrections? And those who are making a little bit of profit, would you say that they should take some money off the table?
Alex, as far as these stocks are concerned, they were clearly the darlings of our markets over the last 1 year when they got listed. And the sector continues to remain highly underpenetrated. But I understand that the recent announcements in the budget, particularly the withdrawal of the benefits to investors in insurance policies, that has given a huge dent to these stocks. But the stocks corrected sharply on the budget day, and from there they have recovered a wee bit. I think for investors, I see these stocks at the current levels being very richly valued. So they can certainly get out of these stocks and wait for some downside. I think another 10 to 15% correction in these stocks would present a very good opportunity for medium to long-term investors.
Okay, so accumulate on dips is the advice coming in from Vikas for these insurance companies, and we've seen actually some rebound at least in the last 2 trading sessions. Okay, the next question is on Wellspin Corp. Piyush Thakur writes to us, he wants a technical view. He's asking if this is a good time to enter into this stock and what should be the target price for the next 2 to 3 months. Remember, the earnings from Wellspin Corp have been good, and we've seen the stock also moving higher in past few days. Samit, I guess these are 52-week high levels at 190. Would you still advise someone to enter at current levels? If yes, what's the target for the next 2 or 3 months?
See, clearly the chart structure looks quite encouraging. If you look at the monthly chart, the stock is now trading around its multi-year highs. And if you look at the volume activity that has happened in the recent price action and recent up move, that looks quite encouraging. So stock has already moved nearly 15-18% in last 3 days. So buy from current level and another dip of nearly 5 to 8 rupees would make it a good risk reward ratio. So start buying from current level, accumulate in a range of 190 to say 183, keeping a stop loss somewhere around 168, and over the next few weeks will not be surprised to see this stock heading towards 210, 215.
All right, let's pull up Thyrocare and see where it's currently trading on the charts. We've got a question from Anurag on YouTube, and he's looking for a technical view. Just about flat as we stand right now, Samit, but on the charts, what are the levels telling you?
So the stock has been quite volatile in last 3-4 days. First it nosedived towards 520, and in last couple of days we have seen massive surge in this counter. Today we are seeing muted session, but overall if you see the previous resistance of 570, 580 is now likely to act as a support. So any dip toward that important level is likely to get bought into. Slowly and gradually we would expect this stock again heading towards 660, 670.
Thyrocare for you. The numbers I remember were good, and hence that move that you're seeing, sharp move in last, I guess, 5 or 7 days. But overall, this has underperformed the diagnostic space compared to Metropolis or Dr. Lal Path Labs. Okay, let me take a query which is coming on WhatsApp from Ritvik Arora. He wants a view on Tata Global Beverages, which is also reacting to its numbers, by the way, today. And the numbers were pretty strong, hence that positive reaction which we've seen. Vikas, we were talking about how this was, in terms of valuation, it looked attractive compared to other FMCG companies. But the move that we've seen in the last 2 or 3 months, it's already trading at all-time high levels. I think in terms of valuation to 1 year forward is somewhere about 40 times. Do you think the move's already played out, or there is more room for upside? Fundamentally, do you like Tata Global Beverages?
Navneet, again, good quality stock, but trading at reasonable valuations. Most of the FMCG companies trade at pretty high valuations, and this is also one among them. The results declared by the company recently were pretty impressive, and the stock has run up. The stock is up today by close to 4 to 5%. I think for a new investor who wants to buy into the stock, I think he should wait for some correction, and I think it will be a good opportunity to buy into the stock on declines. And at the current levels, I think the ones who had already invested should continue to hold on to the stock.
Understood. All right, it's time to hit the rapid fire segment. I'd like to remind both our experts to keep their answers as short as possible so that we can accommodate all the questions that we possibly can. I'm going to start with Manappuram Finance. We've got a lot of questions on this, Samit. It's been correcting and it's now below its 50-day simple moving average. Is this a good time to buy?
No, I'll avoid. Clearly, the stock has already rallied quite a lot. I'll avoid, although it is reaching its important support level.
Samit, do you think Affle India, which has been outperforming, can touch levels of 2000? What, according to you, in the chart should be a target price in the upside?
Yes, in fact, last week we had a buy on this call. We have already booked out, but still we believe that the stock has potential to move higher from current level. So 1900, 1950 looks on cards.
What is the view, Samit, on Cholamandalam Financial? Is it a buy for you on the charts?
See, we are bullish on Cholamandalam investment. Cholamandalam Financial is clearly undergoing some kind of consolidation.
Vikas, view on Jubilant Foodworks, of course, this one has moved a lot and the numbers also looked good, but what is your view? Should someone who's already bought the stock stay put with this?
Yeah, I think it would be a clear hold at the current levels. The company is good and has been doing well.
I mean, do you have enough data on Affle India? We've got a quick. Okay, we've done. Let's take so many then.
Yeah,
home innovation. We've not done that. We've. Do you have a view, Vikas, on so many? Not ceramics. We've got so many.
Clearly, Alex, I do not track this company. Yeah.
Yeah.
No, I do not track this company very closely, so would not be able to offer any comment on this.
Okay, and looks like it's not a very liquid counter as well. Let's address Coal India then. Vikas, I come back to you. Somebody who's bought Coal India at levels of 196, the numbers also come out today. What is your fundamental view? Stay put?
Yeah, I would again maintain a hold on Coal India. It's a good dividend play also, so I think one should hold on to the stock at the current levels.
Okay, let's talk about Bata. What's the entry price, Samit, for you?
See, current price is an entry price. We expect stock heading towards 1920.
Okay.
Samit, very quickly, just squeezing in one last query, a technical view on KNR Construction.
Stock has been consolidating, so wait for further declines to happen around 270, 265.
Very quickly, Vikas, would you stay away from Reliance Infra based on everything that's happening?
Yeah. There's no question to be asked on this stock. One should clearly stay away from this stock.
All right. Well, that's a wrap on this edition of Ask PQ. I'd like to thank both the experts. Thank you so much, Samit and Vikas, for helping us out today.
Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address most of them through our shows. In fact, for all our previous episodes, please visit our YouTube channel or our website, BloombergQuint.com. Thanks for watching. Stay tuned to BloombergQuint.